Welcome back to the Dividend Diplomats YouTube channel. You've got Bert the Herd and Lanny from the Dividend Diplomats. Yeah, I know I look a little scary with the darkness here in the background, still trying to get the lighting right here in the newer house. But guys, we got a stock that's down 30% this year. If you caught Tuesdays, we talked about a stock that's up 30% this year.
Mhm.
Ho ho. But guys, it's a time to buy this stock that's way too cheap to ignore with yields over 7.5%. And is there too much value here that it's just priced incorrectly?
Smash
That's what
that.
we're going to
Oh,
find out.
sorry, everybody. I jumped the gun on that one. I was so excited to talk about this 7% yielding, not 7%, 7.5% yielding stock. I almost cut Lanny off and forgot to tell all of you to subscribe to our channel. Give this video a thumbs up. I can't wait to talk about this dividend stock.
Let me talk to you. Guys, today we're talking about United Parcel Services, ticker symbol UPS. We've talked about them a few times over the last few years, guys. The
Mhm.
big brown delivery truck is here. In fact, gosh, in the last few weeks, I don't know how many times that it's actually been UPS delivering to our house. I'm not sure if it's, Home Depot, I believe, partners with them. So anything Home Depot, when they're not dropping it off themselves, it has been delivered by a UPS driver. And we bought some laptops recently as well. And, that was a UPS driver. And
Mhm.
it's just been very, very interesting.
Yeah.
I've had to make a few returns, and UPS does accept quite a bit of items as well that you don't even order from, like you know like essentially they're taking returns back, I think, on behalf of a lot of businesses as well.
Yeah. I've had some good experiences with it too, some of which um I forgot what it is. It's like is it happy? There's something. It's like happy returns or something where you don't have to package it up. You just take it, they
Yeah,
scan it, and they just take it and they do all the packaging for you, which is oddly a very nice service.
my wife and her family actually just upgraded their phones, and all they have to do is the happy returns. They just
Yeah,
bring their old phones, and that's it, and then they'll
yeah,
take it from there after they scan the QR code.
yeah. And interestingly, I have one that I UPS that's like a tenth of a mile, so I'll just throw it on the stroller, walk there, and go
That is
to my house.
awesome. Oh,
Yeah, but I have not been seeing as many UPS trucks. I've been seeing more FedEx in my neighborhood, more
oh
Amazon.
wow.
So not as much UPS, even though I live, basically throw a baseball to it. I mean,
Yeah,
we would probably
wow.
be in the majors if you could hit the UPS from my house there, but you get the point.
But yeah, we're here to see if this is a stock to buy right now. Again, I know it's been rough for them. First they had obviously the big labor union
Yeah.
strike. That didn't go so well. They just, raised all sorts of compensation packages to keep their workers. And then now they're dealing with the slowdown because of the earlier purchasing that probably was happening in the beginning part of the year from the consumers and the tariffs. And now they're seeing less goods obviously being purchased starting in that second quarter and forward, which ultimately also means less work slash deliveries possibly for the whole delivery industry. Now, revenue has been declining over the last couple of years, but it is up over a 5-year period for them, approaching just about 90 to 91 or probably billion in revenue. I have in our notes here million. That's definitely a billion. um,
That dividend
yeah,
wouldn't be where it was if it were a million, I can tell you
right, exactly.
that.
But they had 100 million in revenue, or 100 billion in revenue in 2022 post the COVID. But what's interesting, Bert and community, their gross profit has actually stayed around the same over the last 5 or so years at around 21 to 22% on the gross profit side. But really, it's all the other expense that's associated, all the overhead that's been going on with UPS, Bert.
Yeah, and what's really sinking them down right now is that really expensive union deal that they struck a few years ago. There's a lot of talk about the negotiations, potential labor strikes to weigh down the business. Management agreed
They've
to.
been closing stores.
Yeah, I mean, this deal they agreed to has been terrible for UPS, great for drivers as long as the drivers are going to be employed, but it's really bleeding UPS right now. That, to your point, has led them to close 74 locations. That has allowed them to have to offer a lot of separation agreements from people, whether it's voluntary or involuntary, just to get people off the books to bring those pension costs down.
Yeah, yeah. And, they're trying to do two things, right? Their revenue per piece that they're delivering is actually up 5.5% per their last release. But they're also on pace to save about 3.5 billion in savings. So they're trying to figure out ways to increase that revenue per item, and then they're trying to find out ways to also save a ton of money, as
Yeah.
Bert said.
In the background for why they're showing that revenue per piece and why they keep focusing on that number, I think it was last year, end of last year, early this year, where they cut their deal with Amazon.
They did.
And part of it was everyone was freaking out that Amazon wasn't going to be a partner anymore. But UPS kept saying, no, our revenue is going to actually jump up because we're getting rid of our lowest cost customer. We're getting our lowest revenue customer. The margins were so thin for Amazon, it just wasn't profitable for the company. That's why you're going to see in earnings. That's why you're going to see in a lot of releases. What is that revenue per piece shipped jumping up to prove that maybe ditching Amazon was the right choice financially, even though it didn't make sense from a headline perspective.
Yeah, I think they followed suit from FedEx because I think FedEx parted ways with Amazon a couple of years ago, right?
Yeah, because they saw the writing on the wall faster than UPS.
Yep, yep, that's right. Now the bad part is long-term debt is at its highest level at about 23 billion long-term debt, up about 4 billion as of late. But from a liquidity standpoint, they actually have a very good position. They have over 6 billion in cash, and their current ratio is well over 1.3x. So those are both great metrics, great things to see.
Yeah. So time.
It's time. Let's run them through it.
All right. We're going to run them through that price to earnings ratio first. Their current price is at 86.67. Earnings per share are 651. That gives you a PE ratio of 13.31.
So low PE, not the lowest for where maybe they should be right now based on how things have been shaking out for UPS.
Yeah.
But what's shaking out here on our plate right now is based on that. They have a 100% dividend payout ratio. Scary, scary time for dividend investors. It would be prudent probably for them to just pause the dividend or cut it in half.
Yeah, I'm looking up right now on Seeking Alpha. They announced earnings last at the beginning of August. So you're going to see earnings coming up here soon. I'm looking when that last dividend was announced just to see when are the expectations of something coming out. Dividend declaration date is going to probably be in the next month out. Next month we're going to learn a lot more about their dividend.
Yeah. So again, keep your eyes on that. Not saying I think UPS, you got to think of the asset behind it, the infrastructure, the information, the routes, what they know is definitely important, guys.
Yeah.
But what has happened? What's their dividend growth here, Bert?
Well, their 5-year dividend growth rate is 12.48%. They've that dividend for 15 years. And why am I laughing? Why am I
No, you're laughing because there's no chance in hell that 12.5% is. It's like 1% right now. So
Hey, those first few years of the 5-year dividend growth rate were very
yeah,
strong.
well, I remember when they like 50% increase. I'll never forget some of those moves that they were doing.
Easy killers. Easy. They're just throwing money around. Their yield, as you said, is now 7.57%. Sorry.
Yep. So
Drop my
you're
phone.
getting paid a ton to wait right now. Down 30%, down 46% in 5 years, still 74 billion in market cap, guys. Could this be a stock that maybe a big investor wants to pick up and start being an active, investor here? I don't know. Could Khan show up? Could Buffett and Berkshire show up here to do something? Who knows?
Market cap of 74 billion. Yeah. Could it be primed for a takeover? Could it be primed for a company that needs the big
Get
logistical
the
network?
activists. Let's go.
Yeah. I mean, that'd be sweet. But I mean, the bigger signs are, I guess my burning question for UPS is actually pretty simple. Is the dividend cut potentially priced in already? That's what I want. That's my question.
What do you guys think about UPS stock? I know right now, at 86.67 a share, are we at the bottom?
Yeah, that's
Are we?
I don't know.
I don't know. Can we get, will it go? I mean, earnings is going to be coming, as Bert said, here in a few weeks. I don't know. I'm watching right now. if we somehow make a move, if I somehow make a move and buy UPS shares, I will definitely let everybody know the week/day that I do.
All right, everybody. Let us know your thoughts about UPS. And don't forget to subscribe to our channel. Give this video a thumbs up. Lanny, what do we need to tell all those Diplomaniacs that are out there?
You listen up, jabronis. You're either with us or you're against us, Jack. That was Bert the Herd and Lanny from the Dividend Diplomats. Over and out.